Welcome to our adulting seminar this week. We are featuring our guest lecturer, Kit Walling, and I will let Kit introduce himself in a little bit. And today we're going to be talking about basic budgeting, which is probably one of the more scary adulting skills out there. Money's pretty scary. But never fear because Kit is here. Take it away, Kit.
Thanks, Gabby. I think I'm gonna open every conversation with my clients just like that. Like, don't fear, I'm here. I
You
probably won't have
have
too
my
many
permission
clients.
for that.
Thank you. I'll have one left. It'll be good. Okay, so as Gabby said, my name is Kit. I'm a financial advisor with a firm out of Lake Oswego called Westpac Wealth Partners. I literally never go to the office though, so you're featuring my guest room that has been converted into my pandemic office. Probably will never go into my office again, which is fantastic. Um, so financial advisors do a number of things just like any other advisor. A CPA could be an advisor if you need help with your taxes, or like a tax specialist, they're an advisor. What I do specifically is I help individuals and families and small businesses save money and then grow it over time, which is not as easy as that very simple phrase made it sound. Um, Gabby talked about this a second ago, but nowhere in any of my formal education did I receive any sort of like, this is how you budget and this is how you pay off your credit cards. Also, here's a student loan. Let's figure that out together. Nobody did that, but I did get the wonderful education from my parents for entrepreneurs that put me in QuickBooks summer camp, aka doing bookkeeping for a business at 12
For
and not
summer
actually.
camp?
Yeah, that's what I did
Oh,
during my summers.
baby.
Yeah, I love them. They're great. But I get to use that knowledge and help people kind of bring back the basics and to learn more about their own financial situation, which I really like. So I'm going to go into some budgeting basics, given that it's mostly staff here too. Thank you, everybody. Maybe some of your questions will be more career focused, but we'll kind of just hop right in. So first thing first, I'll ask either Keegan or Abby, why do you think savings important?
For emergencies.
Okay, that's great. Yeah.
Yeah, I'd say for emergencies. I also say, like, just in general, I feel like I grew up in a lower working class home. So it was like save like your life depends on it.
Yeah.
But now that I'm a professional, it's like for stuff I want to do sometimes, for like the occasional trip and fun thing.
Yeah. Awesome. And then at some point when you get old enough or further along in your career, they say you need a retirement account. And then they don't tell you anything about that too, right? You just open it and then give some money away for like 40 years. So yeah, savings good for emergencies, right? When things hit the fan, it's nice to be able to handle that rather than having a big moment of anxiety. So for me, money can be really overwhelming, especially when a lot of things are very stressful. So an example is I had to put new pipes in my house because I was an idiot and thought I could fix the pipes, could not fix the pipes. And that turned into a very expensive, I think I can do everything moment. So I learned, but by budgeting or kind of factoring those in, the cost of owning a car, a home, getting your degree, those bumps in the road don't have to be big traumatic events. They can be like, oh yes, I have planned for the worst. Here we go. Like I'm good to go. So not only from a financial standpoint, good to save money, but from a well-being standpoint, also good to save money, right? The more planning we do, typically the less goes wrong and the more confident we are in our decisions to do that. So I'm going to share my screen here in a second, and I want to show you all this example, and it really speaks to why saving is more important than anything ever. And if a financial advisor tells you different, I would question their motives. So this calculator here that I'm going to show you real quick it's called wealth building potential, but realistically what we're going to do is we're going to say, hey, I'm going to work for 30 years. Let's say this year I make $40,000. How much money can I make over my working career? Quite a bit. Almost $2.2 million. That's a lot of money for, I personally don't know anybody that's like, oh, $2 million, whatever. But $2.2 million is a lot of money. Obviously, this just says, hey, if we work for 30 years, we had a starting pay of $40,000 and then got some sort of increase over time that averaged out to be 4%. And then we never spent another dollar. This is what would be in our bank account. Literally not possible, right? Last time I checked, humans need to eat. We need to do things. Every once in a while, I want my latte from Starbucks, being basic or whatever. My partner, she definitely wants her latte too. So this $2.2 million goes away really fast. So between taxes, any debts, and your lifestyle, we can kind of make an assumption that most people are not saving. And let's just say between taxes, debt, and lifestyle, we're spending actually 95% of our earnings. Pretty common to see. Really big difference, right? Our $2.2 million went to $112,000.
Wow.
Yeah, right. Like that's not as exciting. The reason though this is kind of cool is if we look at this number, this $112,000, if all we're able to do is tweak our savings, nothing else, not using the market, nothing, what we can do is we can double our income or our savings in 30 years, right? Over time, we can maybe make that even more. Hooray, we've tripled it just by saving 15%. So 15% meaning into a retirement account, you know, those $5 that stack up in your Acorns account or whatever you like to use, all of it counts towards savings. What's also kind of cool to see here is if we go back to this 95 example, go back to where we had only $112,000 in our account. Let's say we want to use the market, right? If you go to Google and you say how to invest, right, the first thing they're going to say is like open a Robinhood account and buy AMC or whatever Reddit tells us to buy today, which is your right to do. But if we look at the market over the last 30 years, the average return has been 6%. So between all the companies in there, average return of the S&P 500 is 6%. So it's saying, hey, that 5% that we're saving, we're actually going to take it, put it into the market and hope for kind of average. Wow. Only $265,000. Yeah. Thank you, Gabby, for the sound effects.
That's the only reason I'm here.
Great. That's really not a huge difference in terms of what we were able to do from savings versus using the market on that 5%. So what I like to tell my clients is market is a tool, but it should just be a tool. We can't invest if we don't save. We can't do any of our goals if we don't save, anything like that. So let me stop that and I'll pull up my other spreadsheet.
And so when you say saving, Kit, you mean in your savings account, checking account, retirement, stock market, like all of those put together?
Yeah.
Okay.
And we can chat about that at the end because there's kind of 3 buckets that we put savings into. A short term, a midterm, and a long term. Short term, your bank accounts, right? If you need it today, you could go grab it. Long term being a retirement account. So for all of us look less than 65. So I'm going to make an educated assumption that we're not at retirement age. If we wanted to go grab retirement money, there would be a penalty and then there would be taxes. So my $100 in that account really probably dropped to like 40 and then I could use it. So less exciting. All right, let me pull up this and we'll talk through kind of some of this. Can you see which budgeting basics is that up on the screen? Okay, cool. It wasn't telling me that, so we're just gonna skip through that. So in finance, you'll also find that there's about 4 terms that mean roughly the same thing. So when people talk about banks, they're actually talking about financial institutions. When you're talking about any sort of lending agency, it's a financial institution. A credit union, financial institution. So people start throwing big words at you. Oftentimes it just means a bank or a credit union or some sort of loan agency. But just for education, it's a financial institution. So banks and credit unions work the same way. You can deposit money. Everything's electronically now. I've never stepped foot in my bank ever, which is awesome. I don't really want to. Banks are not my favorite spot. But I can deposit money on my phone. I can send money on my phone. And then in your savings account, there's 2 different types of accounts. There's checking, which is kind of your everyday savings or like everyday spending. It doesn't earn any interest. And then you have a savings account, which depending on interest rates might earn interest or not. You look at the current interest rate environment, and then you look at your savings account. If you have one, it's probably like 0.005%. So maybe you made like a penny last year, like I did in my savings account. It was not exciting. There's also kind of 2 other account types that you can open that are considered liquid. So you're able to go get a CD is relatively liquid. There might be some sort of surrender charge. Ultimately, it's you put money away for 6 months, you should earn more interest in your savings account, and then you get it back out. A money market account is even more liquid than that. So it uses short-term debt to get you a higher interest rate. Although this environment, the interest rates are so low, you're probably not getting anything more than 10 cents every time you look at a statement, depending on the account balances. So a couple of things to remember about banks is actually look at your monthly statements so you know what's going on. Some banks charge fees if you don't have a high enough balance. Some banks will charge a fee if you use the wrong ATM. Some banks won't, everybody messes up at some point, even computers. So you want to make sure that their accounting is correct and you know what's in your account. Nice thing about banks and credit unions is those deposits are insured up to $250,000. So if a bank or a credit union goes out of business, you're still able to get $250,000 of your money back. So if you have $1 in there, you're going to get $1, not $250,000, unfortunately, but it is insured up to $250,000. Investment accounts don't work the same way. There's no guarantee, right? If you put your money in the market, there is some risk. You're a small owner of a company, and as a small owner, if they go under, you might not get anything. So they're not insured. All right, pay stubs. This is something that nobody ever taught me how to read, and then also super important to know how to read, especially depending on your employer. Nobody's a pro at accounting and pay stub stuff unless it's like literally what they do all day. So when we look at our pay stubs, I made my own company. I'm pretty cool. That was a joke. Sorry, it was really bad. But in this example, right, I have my regular earnings over here times the number of hours, and then in theory, right, I should be getting $1,200. And then taxes come and they say, nope, that was fun, thank you. So there's different levels of taxes. Honestly, I like to prefer that that's how my taxes like come out of my bank account. Otherwise, I just get pretty angry because I've worked for it, and I think that's a whole other point. But we have federal taxes. If you're in the state of Oregon, you have Oregon state tax too on your income. We also have to pay into Social Security and Medicare, even if you're not receiving Social Security or Medicare. This is a big point of contention for people probably 45 and younger, is they've been paying into these systems from day one, and they might not get any money out, but know that you have to pay into it and you can't opt out. So do with that what you will, but keep paying your taxes. Also, if you're in the Portland area, which Western I know is definitely not, but I'm in the Portland area, so this one's important to remember, is we also have a TriMet tax. So if you use public transportation, or if you don't and you live in this area, you have to help fund that system. Any questions about that? No, I didn't think so. So your gross pay is just your hours times your rate, which is at $1,200. And then what's called net pay is after they take everything out after tax. Way less exciting. So this number down here, this 921, is what should hit my bank account after they hit go on the computer on payday. All right, taxes. I think this one's important when we're doing budgeting, because when I first started work, I did work hourly, and then nobody explained taxes to me, and then I couldn't figure out why my money kept going other places, and then some checks it wasn't as much, and some checks it was. So when you look at your taxes, every tax bracket in the US is progressive at the federal level. So everybody, even Jeff Bezos, maybe if he pays taxes, will pay 10% up to the first $9,800 that he makes, or I make, or whoever. If you're married, you get more, but if you're not, you don't, unfortunately. And then 10% on this bucket of money, anything from $9,876 to $40,125 is taxed at 12%. So it's not 12% on all of your earnings, it's 10% and then 12%. So that's why if you bust open your Excel spreadsheet and you're like, I got this, I'm gonna do this math, it doesn't always add up perfectly because they're progressive. The state of Oregon adjusts our taxes due based on what we can adjust our federal taxes to. Everybody gets a standard deduction. It's about $12,400 currently. And then we're taxed on that. So if I made $50,000, I could take my deduction of $12,400, and then I would be taxed on the remaining $38,000. And then we have all the deductions, things like that. This is supposed to be, oh, sorry, let me go back. This is supposed to be more equitable and fair, but this is where it stops, this 32%. So anybody making more than $208,000 is only paying 32%, maybe. So I'm gonna let you figure out the issues with that system, but they're there. All right, so when we look at budgets, couple things to keep in mind is there's only so much you can control, right? Control the controllables. So you can pick your job, which hopefully helps you negotiate a salary, or maybe not. But oftentimes more what's in your control is what you spend money on. So you can choose where you live, maybe if you're on campus or not. I went to Willamette and they made us stay on campus for like 3 years or something ridiculous. So I don't know why, but that was part of the deal. I know they're weird over in Salem, so you all are smart out there. But so we have to look at our expenses, big ones being right, food, shelter, and kind of your basic necessities, all the things that you need to be functioning as a human being. Depending on arrangements with school, maybe you're not paying for your health insurance, right? Until you're 26, you can be covered under your parents if that's an option. So that might not be something you have to factor in. Some folks don't have to pay for their cell phone. I once had a partner who was 32 and her parents still paid for her cell phone. So I don't know how that arrangement still worked, but it was great for her. That expense was not there. But we want to kind of keep in mind everything. And what I found is really helpful is instead of projecting forward, all right, these are going to be my expenses next month, I like to look backwards at my bank account and see what I actually spent. I know what my rent payment was. I know what my car payment was. I honestly don't know how much I drove though if I sit here and try to think about it. So I can go see the number of times I filled up my car, right? And I can factor that in. Same thing with food, right? I have no idea what it's going to cost, for X amount of groceries over a month if I've never done it before. But I can look back at the last month and say, okay, this is what I spent at Winco. This is what I spent in Safeway. This is what I spent at the grocery stores. So when you're creating a budget looking forward, for me, it's really helpful to look backwards into your accounts and see what you did. I have a very bad habit of ordering stuff offline at like 10 p.m. I've heard that's relatively common, but my partner doesn't do it. It's really annoying. I wish she would, so that she would get off my case. But those are important things to keep in mind. When I'm thinking about my budget, I'm not thinking about the random stuff that I thought about at 10 p.m. that I ordered offline and then showed up 4 days later. That's not in my necessity view. But my rent is, my car is, my insurance, all the things that are like big, that have big bills, or somebody telling me, hey, this is due. So by looking backwards, we can take what happened and kind of reconcile it with what we want to happen. So first things first is you got to see what the heck you're doing. And that's a lot of the things that I do with my clients is we go in and we just see what you're doing. Are you spending more than you make? Possibly. In school, probably, definitely, unless you can, manage to do school full-time and then have the 4 or 5 full-time jobs that it takes to fund school full-time without a scholarship. I don't know a single person that wants to do that, but more power to you if that's you. So look backwards. That's kind of where I'm going with that. The second piece of budgeting for me is make some goals. What am I budgeting for? So Keegan, you mentioned kind of like trips or like things, right? Super good example. What comes up when you think of things that you want to buy, but like maybe shouldn't? Literally anybody. Cool.
Do it, Keegan. We both breathed at the same time.
I mean, it's just kind of what you were talking about, where it's like I see it. It's like this shiny thing that I see online, and then it's like a knee jerk, like buy it because I need it, and it's like fun. It looks fun. So what I consider things that I save for, as opposed to that, is like stuff that I think about more. I can justify to myself, like it's important to me in some way.
Totally.
So.
Totally. I 100% agree. And if you work in sales, or if you will work in sales, or if you have parents that worked in sales, I've also found I can convince myself of literally anything that I need or want. 100% have to have it. It's in budget. I will figure it out. Right? That's not exactly how that works. For my house, when I had to buy new pipes, that was 100% not in our budget, but I convinced my partner that we needed them because I broke them, which honestly was true. But the point is, we need to be thinking of even that small stuff. So a lot of times when people think of things that they're saving for, it could be like trips or a new like cool computer or parts for your, whatever your like passion is. Usually that's the thing that they're saving for. But if we think back to that kind of that wealth building chart that I showed you, saving really comes back to the whole shebang, right? In terms of, it's not just saving for that new car or that new whatever, or that shiny thing you saw on Instagram or TikTok. I think TikTok's telling me I have ADHD. I need to clean my pots with salt and alcohol. What else did it tell me? Well, that I have ADHD. So we're just gonna
skincare. So much skincare.
So much skincare, right? Mine is like turned into just like, these are the 4 things you can do with your lawn to make it look fantastic. And I was like, oh, I'm not 35 yet, but TikTok thinks I am. So we're trying to budget things. we want to think of the necessities. We also want to factor in those shiny bright things so that we're not cramping our lifestyle too much, but we're also paying ourselves first. So we look backwards, we look at the necessities, we pay ourselves into savings from the get-go, whether it's $5 a month, $100 a month. If you're Jeff Bezos, like $4 trillion a month, I have no idea what he does with his money. Regardless, savings first, necessities, then the fun stuff. So it comes down to those three. When we look at we looked at this before. I'll go back to that. But that gross versus net, if you have a job making $15 an hour, please don't think you're going to bring home $1,200 every 2 weeks, right? We all know taxes are going to come out of that. So we really need to budget based off of that $921 that's going to be deposited in our bank account. Another piece of this is you also want to make sure that the timing of your bills is appropriate too. So rent is usually on the first, right? It's usually one of the larger expenses for most folks. If you also have a car payment or a student loan payment or something else, it might not be smart to stack them all in the front half of the month, because then you'll have or feel like you have no money until that second or the end of the month payday, right? And then it immediately goes right back out. Honestly, that's one of my worst things, or like the least favorite thing is I look at my account, I pay all my bills, and then I look at my account again and I go, wow, that was fun. That was a whole 5 minutes of money and just gone. Another key piece of that too is if you share a bank account with a partner, you might want to communicate about what that looks like. My partner and I share one account, and neither of us at the get-go were talking very clearly around when our bills were coming out. And so quite often we'd look in there and there'd be $12 and I'd be like, we both just got paid, what happened? So then when we timed our payments appropriately between rent and our cars, we actually had more than $12 in our account for 3 weeks, which honestly made my anxiety just go down a little bit. So we want to make sure that we are spending less than we're making. Not always possible, right? But we always want to be saving at the end of the day. So maybe you have to cut out a subscription to something really cool, or that bespoke box that keeps telling me that I need to buy it on Instagram. Like, really, I just cannot buy it, even though they look really cool, whatever the thing is that they're trying to get me to buy. Savings at the end of the day is number one. The other big things there are automate it. I'm lazy when it comes to it. If I have to transfer something from one account to another, I won't remember how to do it. I remember how to do it. I just won't remember to do it. And then like 4 days later, I'll be like, oh crap, yeah, I was supposed to do that, right? Many bank accounts have what's called like a savings booster feature. So if you get a deposit over whatever amount of dollars, you can set it. It'll transfer a certain amount to savings or a certain percentage based on your whatever you set it to do. So if you do that, set it and forget it, you'll be saving and you won't be thinking about it. Easy day. The other thing that really trips me up is really just those subscription things are like, oh, download this app and you get a month free, and then all of a sudden it's like $100 that comes out of my account, or whatever it is. So I like to set like reminders on my phone when the subscriptions are going to auto renew, so that I can either cancel it or decide that it's part of the budget from now on forward. And that's literally my face every time something comes out of my account and I didn't know that it was on auto renew. I freak out like that on my phone. All right. We are part of the digital technology age. I think that's an outdated term at this point, but whatever. So there are a number of apps and things that you can use. Some cost money, some don't. Mint is free. It's also owned by Intuit, which owns TurboTax. So if you have some bad feelings around that conglomerate, there are other options. YNAB is a company, you need a budget. I do think they have a monthly charge, but they provide you some like email insights in terms of like how you're spending and kind of keeping you on track there. Pocket Guard, this one is actually relatively new and not well known, but this one's really cool. and I like their layout a lot better. But realistically, if technology is kind of the easiest way to go, find one that works for you. Fingers crossed that it's free, and stick with it, right? The other thing too is, just like everything in your life, you can't go from 0 to 100. So if we decide, all right, we're going to make a budget this month or whatever, maybe we just make the budget the first month and keep track of our spending rather than just do nothing, right? One, we don't want to bury our heads in the sand because we never get anywhere. But two, if we try to do too much change at once, we'll probably revert back to whatever behavior or habit that we weren't stoked about from the beginning, and then we'll stay there. So small changes over time. So maybe the first step is just to automate that savings transfer. Boom, check. Next week, right, I'm going to check how much money I spent at Safeway. Did I actually buy the foods that I wanted or the things that I needed? Yay or nay, right? Kind of figure it out from there. Usually it can take 2 to 3 months to do this shift over time and feel good about it. But there are probably 1,000 strategies. At the end of the day, none of them are too terrible, in my opinion. But the main piece that they never tell anybody is we got to save. And we'll talk about this kind of in the other sessions. I think, Gabby, we're going to do one on like student loans and debt and things like that. But one thing I want to mention before that is there's a lot of marketing out there that says, hey, we have to pay off our debt. I think SoFi has tried to get me to like refinance 4 loans this year, or like, you have a student loan, you're effed, or whatever the thing is, right? One, not our fault. The generations before have built a system where we have to take out debt in order to live, which sucks. And two, yes, paying down debt is a great thing to do. And I'm never saying don't pay your debt back. But what I'm saying is prioritize yourself first and pay yourself first, AKA save, because we'll be able to do more on the debt side to manage it if you have savings to do something with it. Oftentimes we can refinance loans to make them have smaller interest rates. We can ask for a deferment. There are numbers of things that we can do on the debt side to manage that. But step one, always save. Always, even if it's a super small amount. What questions does anybody have? Cool.
I mostly just wanted to highlight that, some of the most useful stuff that I've learned from you, Kit, is those setting up all of the auto transfers.
Yeah.
Like, it's so worth it to go through and open up the second checking account that is just for bills. And I even named mine Bills checking account, like possessive of bills. So that I can be mad at Bill for taking all of my money. Gosh darn, Bill. Bill Nye the Science Guy. Bill. Not that Bill. No one can ever be mad at that Bill. But that's just been really, really nice and has taken a lot of stress over making sure that did I pay that one? Did I pay that one? Let's make sure I don't miss any of them. But if it's all on auto, then it's fine. All of it's good.
Yeah. Gabby has seen me draw many times, but I will draw for you all because I think that's super helpful in terms of what you were just speaking about and the account structuring. So there's a couple of ways that we can do that. There's more than a couple ways, but these are kind of the two that I like to show people that I work with because they seem to make the most sense to my brain. But again, there are many, many options. How do I work for Kit's Cool Company? You're hired, Keegan. That's it. That's all you gotta do.
It's like waiting in suspense for the answer to that question.
Sorry, I didn't have my
Half an
chat
hour.
popped it. Yeah.
You're fine.
Yeah, I was like, you can work for me whenever. Okay. You see a black background? This is for your eyes too. Okay. So one, I hope you're being paid via direct deposit, because if you're not, like, let's talk to that HR manager or that business owner and do that. They're wasting time and money printing checks. But most folks get paid via direct deposit. I have really bad handwriting, so I'm really sorry. And then it goes into a checking account, and they might have a savings account. Does that look pretty familiar?
Yeah, except for when you were drawing for me, you did in rainbow pen, but it's fine.
Yeah, I did do rainbow pen. We'll do rainbow pen in a second.
Yes.
All right. So for most folks, this is kind of what happens is money goes into their checking account, then they pay some bills and stuff, and then maybe not, things good over to their savings account. Sound about right? Keegan's like, no, it does not sound correct. So there's kind of two structures that I like to take a look at, but one is really just adding another checking account, which should be free. If you're charging you for a bank account, maybe look at a different bank. But this checking account is often called bills. Yep. So you can be mad at it or not. And out of here, instead of just kind of this direct line flow out of this account, we direct all your necessities over here on auto transfer. So this would be your rent. This is your phone. This is basically anything that can go on auto pay, right? Well, depending on who your landlord is, that might not be an auto pay situation, but that's a big predictable expense every month. So these are all the knowns. And then from here, usually there's some amount of money left over between what you have to pay and what you got paid. So then we can use this as fun money, right? You can budget yourself for the things that you want to buy. So if that sparkly thing pops up on your feed, you're like, heck yeah, I want to buy it. Let's do it. I've got money in that account, right? So just visually separating the two can be really helpful, because you know, hey, I've taken care of my bills, my necessities, and now I've got money in this account to kind of do whatever I want with. The caveat to that, right, is first steps first is we want to set up an auto transfer here and make sure that we're paying ourselves first. So out of the money that's left, let's say there's $100 every month. Let's go ahead and save 50 of that over here and have 50 to buy sparkly things with. Super rad. So every month you've covered your expenses, you've saved, and you have money left over for your lifestyle. Pretty rad. I'm about that.
So I have a question.
Yeah.
So in your opinion, talking percentages of like what you take in, the gross amount you take in, what would you say is like a healthy, maybe you mentioned this earlier, but I missed it. What would you say is a healthy percentage of like take home stuff to save versus like spend on fun things, or maybe a way to look at it? I don't know.
Yeah. Ideally, I work with my clients over time. Again, this is not like an instant transformation, to get their savings, whether it be retirement, regular savings, kind of the whole thing, up to 25% of their income. So most people come to me and they're either not saving on purpose, or it's kind of just a little bit here and there. What we do is we work to save. Really, the first milestone is 10%, is what I like to see over here in the savings. The other piece of the puzzle too is having kind of 6 months worth of oh crap money. I think COVID really showed us that that's super important, because we don't know what the world's going to do overnight, or shut down or reopen, or shut down or reopen, or shut down again. So having those cash reserves, one, just provides you some sort of security, knowing that like, hey, if things really did go wrong, I've got time. I can breathe, I can make a plan, and then move forward. From there, what we also do, I keep pulling this up, and this is where I'll pull the rainbow pen is. This is kind of where I bring in the three buckets that I was talking about. So we'll move over to the rainbow pen in a second. So we've got our short-term bucket. Oh, it didn't shape. That was rough. That one didn't do it either. We'll just pretend that it's doing it. Okay, well, my squares are not cool anymore. Rough. All right, so this is short term, midterm, and long term. So on the savings buckets, what we want to use is the savings account becomes kind of like a reservoir account. And so the reservoir looks like this. Once you get that 6 months in here, kind of that oh crap money, then we start using the excess, because we're still saving every month, to start funding these buckets. So short term being that 6 month oh crap. And then anything that comes in above that, we can start funding midterm stuff. So this could be investments. That's usually what people get stoked about. The rest of it is boring financial products, but mostly investments people get stoked about. And once we get this at an appropriate level, then we start funding the long-term stuff too. So this could be retirement, real estate, all that stuff. Ultimately, what we want to do is kind of like those pyramids with like the champagne glasses where you fill one on top and then it overflows and then it fills two more, fills three more. That's what we want to do. Because cash on hand, great. You've got your security blanket and you're good to go. Then we can start funding kind of the real wealth building things where we're growing money, where we're talking about what to do with it. Do we use the market? Do we whatever? But we take this approach because one, this stops the cycle of short-term debt use, meaning credit cards. So if we're able to have that 6 months of oh crap money, when something hits the fan, instead of pulling out a credit card, you have cash if you wanted to, right? If you use a credit card responsibly and pay it off, fine, but you don't have to use a high interest instrument to cover that car breaking down or my pipes breaking or whatever the thing is, right? So we've taken that away and then we start to build from there. So first step, breaking the cycle, and then we build. Does that make sense?
Yeah, that was a fantastic explanation. Thanks.
Cool. I love rainbow glitter pens.
It really helps.
It was mostly the rainbow pens that did it for me.
Yeah, it's definitely more like visually pleasing with the rainbow, for sure. And then you can't read this says investments. The other kind of key piece of this too, and this comes down to budgeting, is like how much money do you keep liquid or accessible? This is usually kind of the spot where people start to see their savings accounts like getting big and they're like, I must pay down my debt. That's it. That's the only thing I can do. And it's like, okay, yes, we can pay down our debt. And that's certainly an option. But what if tomorrow, after you've hit send for your student loan or your car or whatever the thing is, your car breaks, or you found out that actually, your partner got COVID, or, we could go down the trail of like what ifs, but we want to keep that 6 months of savings in there and then move on to tackle the debt. And everybody has it, right? If you're under 60, you probably have some form of debt, whether it be a student loan, a mortgage, a credit card. It's been marketed to us in every way possible. And so now we just need to, part of what I do is just teach people how not to have to use that into the future. You might use it as a tool, but we don't want to rely on it for forever. So big picture, that's what budgeting looks like. And then even bigger picture, how to build after you do the basic budgeting. That's really kind of all I had for today. I don't know what else.
Yeah,
Is
That was amazing. We are going to focus next week, next Thursday, on credit, debt, loans, understanding all of that. And I know that there's a lot of excitement for that. And then the following week, we'll be going into investments. So thank you so much for getting us started today,
Yeah,
Kit. And we'll see you again next week.
cool.